All right, everybody, we're back with another bull versus bear case. This is a series I launched on the channel probably a month ago where I go over the bull case, the bear case, and my overall thoughts on a company. But the challenge here is I have to do it in under 5 minutes. And this week's video is going to be quite the challenge because I am not only going to be diving into a company that is a little complex, but has also been one of the best Canadian technology stocks outside of maybe Shopify, but I would argue the company is higher quality, more consistent than Shopify in Canadian history. That is Constellation Software. This is a holding I've owned it for, it's got to be going on 5 years now, pretty close to it. It is a stock that everybody believes is expensive all the time. It has a very high share price, so investors tend to ignore it. However, that has changed a bit now with the fractional share ownership, but it is one of the most misunderstood companies, I would say, in Canada, and is one that a lot of investors avoid because they simply cannot understand it, which is a completely valid reasoning for not owning a company. But if you do have the time to actually dig in and do the research on this company, it is an absolute gem. And speaking of absolute gems, I have 3 of my favorite stocks in 2025. That's down in the description. You can grab it absolutely free. And remember, like the video, subscribe to the channel, but most importantly, comment down below because I take the next stock I'm doing in these videos directly from the comments, and Constellation Software was by far the most popular one. So I'm going to dive into it today and let's get started. So what is Constellation Software? It was founded in the mid-1990s by Mark Leonard. He's one of the, I would argue, one of the best Canadian CEOs around, and it is a company that primarily grows through acquisition of vertical market software. So this is where a lot of people get confused. What exactly is VMS? So effectively, it is software that focuses on a very specific niche, whereas something like horizontal software would be something that is very broad. So if you think of a vertical market software company, we could think of something like medical records for a healthcare company, or maybe inventory management for an automobile dealership, maybe case management software for a legal company, or a construction company is looking for a piece of software that can make it easier for them to bid on niche specific projects. So what this vertical market software ultimately does, it creates very high switching costs and it creates very strong renewal rates because there is not a lot of software out there that actually serves the purpose for the underlying company. So it is very sticky, and Constellation has acquired hundreds, I believe it's over 600 acquisitions, and ultimately it buys these companies, merges them into the fold. They aren't growing very fast, but they're very profitable, and ultimately what it aims to do is to continue to deploy capital at high rates of return. So the bull case for this company would be the history of successful acquisitions, acquiring these companies, profitable ones at that, and understanding the fact that they continue to grow in the future is not an easy task, but Constellation has effectively done it for the better part of 3 decades. This is a proven model. It has worked in the past. It is likely to work in the future. In addition to this, the company has grown free cash flow at a outstanding pace. If we look to a chart here, we can see free cash flow increase over the last 10 years by 627%. And another thing you'll notice is free cash flow per share increased by 627%. Why exactly is this? Why are these absolutely identical? And it's because Constellation Software does not issue shares. If you look at its shares outstanding chart, it is about the flattest line you will ever see. The only reason this ticks up a bit, it's just a Y charts data error. This company does not issue shares. It maintains them the exact same, and it primarily utilizes the free cash flow it generates plus debt issuances to fund the acquisitions. The company is very diversified. As I mentioned, it's acquired hundreds of businesses and has exposure to over 75 different verticals. It makes it very well diversified. And the final one I'll go over is the element I mentioned before, very high switching costs and very high renewal rates on its software because it is so niche and absolutely required by the companies to operate in the industry they do. Now, the bear case for Constellation Software, the main bear case that many have talked about for many years, is the fact it could run out of acquisition targets. And if it does, the underlying portfolio of companies it acquires, they typically only grow organically by anywhere from 4 to 6%. These are not fast-growing companies. They're cash flow positive companies, very profitable companies, but they don't really grow. So the company will need to continue to find proper acquisition targets moving forward, and it has stated in its last few AGMs that is having difficulty doing so. They have mentioned that they are likely not going to be able to grow at a 20 to 25% pace anymore because deploying billions of dollars into these types of VMS software companies is relatively difficult. There just isn't really a lot of them, and they might need to expand out of that VMS area, which ultimately exposes them to something they don't necessarily have a proven model for. That is effectively one of the only bear cases for this company. It is executed so well over the last while that ultimately its main business model of acquiring these companies is definitely the main risk. So my overall thoughts, I think this one is an absolute gem all day, every day. I continue to buy it pretty much every single month. I take small positions every single month, build out my position. I first bought this company, I believe it was in 2021. I really liked what they're doing, and I really think there is still a large market moving forward for the company. Yes, it is unlikely to provide 20 to 25% compound annual growth rates like it has historically, but it does not need to do this in order to become a strong market outperformer moving forward. This has been pretty much the cherry on top of the pie, the 20-25% annualized returns. It doesn't really need to do this in order to be a solid investment, and I think they're going to continue to deploy a large amount of capital into very profitable investments for investors, which ultimately should grow that free cash flow per share and ultimately benefit investors. So everybody, I hope you liked the video. Head down below, like the video, subscribe to the channel, but most importantly, drop a comment on what company you want me to go over next. That's absolutely key because, again, I do utilize the comments to make these videos. And as always, free link in the description for 3 of my favorite options in 2025. I've had this report for a couple of years and these stocks just continue to crush it. Constellation Software is in that list, but if you want the other 2 stocks, just head down below and grab them. It's absolutely free, just takes a few seconds, and we'll see you next time for more great Canadian content.